We are getting bad news out of the EV sector in China today with XPeng earnings, and we got the latest to bring you guys. This is pushing down Tesla stock about 2% here on the day. But wait, it gets much better than that, because today in after hours, you're going to have NVIDIA earnings, which has really pushed up this whole market with AI. NVIDIA was kind of the place where this all culminated that pushed up all of your big tech stocks. So I think for good reasons, NVIDIA earnings will be important, and we're going to talk about it. On top of that, the debt ceiling. Not very encouraging things happening on that front. McCarthy basically says there's two things that is holding this up. Number one, they're not going to raise taxes. They will not vote on a debt limit increase that raises taxes because the government's bringing in the most money that they have since 1944, in which the world was going through World War II. So things are fine as far as a revenue standpoint. And the second thing is spending. There needs to be deep spending cuts to get back on a more sustainable path. And both of those things do not look like things kind of Democrats want to take into consideration. So this is coming down to the wire, and it's making financial markets that much more uncertain. And if that wasn't enough for you, we had Fed speakers today, such as Fed Waller, that urge maybe we're going to have to do more to fight inflation. And we had the Fed minutes, which was not that great. So we have the headlines. We have everything you guys need to know. Let's jump straight into it. First, we're going to talk about the macro here. What's happening with, obviously the Fed minutes, with Fed Waller, as well as the debt ceiling, and touch on NVIDIA earnings. So first things first, Fed minutes came out at 2 p.m. today. Some of the main headlines are the Fed is now split between raising rates or pausing. Now, what you have seen over the past really year and a half now, since the Fed started raising rates, or even before the Fed started raising rates, basically all of Fed members were on the same page. Like, we have to raise rates, we got to keep at it, we got to keep doing it. And now they're becoming more split, which some people would say is a bullish thing. But you're getting big divergences here, and a lot of Fed members are expressing the need to be data dependent to really see what the next data points are going to be. Next big data point on inflation is going to be on Friday, when you get month-over-month core PCE. Those numbers, that's the Fed's preferred measure of inflation. If they are hot, not going to look good. And then the day before the Fed meeting, on June 13th, you're going to get CPI numbers that come out. And that's really what the Fed wants to see, is how do these data points look like leading up until June? If they remain hot, you're probably going to get another rate hike. If they don't, well, you might get a pause, or even some Fed members think that maybe pausing in June would be a good idea and then raising rates in July. So you're getting a lot of uncertainty. Fed members don't even know what they want to do right now. And that is kind of the thing markets hate the most, is uncertainty. Went over data dependency. Basically, all Fed members are expressing the need to be data dependent. They also said that cuts were unlikely this year, even as their base case is for a mild recession starting later in this year, and then to subsequently see growth pick up in early 2024 or mid 2024, I believe they said. So two kind of consecutive points right there. Now, they also mentioned that raising the debt limit was essential. And this is interesting because the Fed is technically its own separate entity. It's not supposed to be involved in government at all. And they usually don't comment on government, policies or what's going on. But they're making a firm stance that the debt ceiling needs to be raised. If not, I'm sure there's things the Fed could do. They would obviously cut rates. They would do, things like that. But that would be like an economic apocalypse. That's the last thing you want to see, even if you're a bear on Wall Street, is to see the government default. Now, they also all said that inflation is unacceptably high. So really putting that focus on data dependency here. So I think the next, catalyst we get are going to be so important. Now, like I said, Fed Waller as well did make the headlines today because he says there is more work to be done, and does cite that maybe a June pause would be necessary or a good idea, but a July rate hike would then be in store. This is kind of following suit with all of the other Fed officials that you have heard from over the last, week or two here, that they're gonna have to raise rates even more. So there you have that. Now, on the debt ceiling situation, I think the markets are starting to get a little bit nervous on this because you have 8 days until we could default on the debt. Republicans are like, hey, is it June 1st? Or is it June 3rd? Is it June 5th? Is it June 6th? Or is it like Goldman Sachs thinks between June 6th and June 8th that we could technically default? Well, who knows? But a lot of experts think it's going to take 10 days at least from the point they come to an agreement on a bill in these negotiations to bring that to the House, to pass it in the House, to pass it in the Senate, and then get Biden to sign it. So if the June 1st is the actual default day, if that is the X day and where a deal needs to be done, every day from now, it's increasing the odds of actually seeing a default, even though none of us expect to see a default. Now, this is something that could be very negative for Tesla, an obvious default, but spending cuts. It's hard to say, it's impossible to say where those spending cuts would be. Is it an EV tax credits? Is it in solar? Is it in, where are the tax cuts going to come from? So that could be a negative thing for Tesla and something you definitely want to watch out for if you are a Tesla investor or just for the broad markets. Broad markets, they've been held up due to these spending sprees from the government. If the government does cut back and stop spending as much, that's not going to be very supportive for the economy. Even though the Fed has been raising rates, all of this, there's been trillions of dollars of stimulus let into the economy due to Build Back Better plans and other bills that have been passed over the last year and a half, 2 years now. So even if the debt limit gets raised, it still could be a negative thing for our markets. Now, last but certainly not least is NVIDIA earnings. Now, NVIDIA earnings, I think, are going to be more important this time around because NVIDIA typically doesn't move the broad markets, but NVIDIA was basically the epicenter of this AI revolution. It's like the gold rush in the 1800s, right? People were moving out west. They wanted to go find gold. But who really made the most money? Sure, some individuals did do well or whatnot, but it was the pickaxe and the shovel companies. Those are the guys that actually did well. And NVIDIA is seen as the pickaxe and shovel of the AI revolution. So they kind of have seen the best or biggest benefit from AI. And if they have bad earnings, that's going to be very negative for mega cap tech in general, right? That's not going to be good and could push down even names such as Tesla. You're also going to have Snowflake that reports earnings in after hours, as well as Elf, Splunk, Digital Turbine, UiPath, American Eagle Outfitters, Seattle Mobile, Red Robin, and Zora that also report here in after hours. So there you have that. That's kind of it on the macro. Again, for data tomorrow, there is going to be a lot of it. You're going to get a lot of second estimates from GDP, from the Chicago Fed National Activity Index, from real consumer spending, GDP sales, core PC prices, pending home sales, Kansas Fed Composite Index, Kansas Fed Manufacturing Index, and by and large, you're expecting things to get a little bit better across the board. You're expecting economic activity to get a little bit better. You're expecting housing to get a little bit better than the previous readings. You're also expecting initial jobless claims to stay pretty much flat on a week-over-week basis. So you want to see for the outliers there. It's going to be a lot of data coming in between 8:30 and 9:30 in the morning tomorrow, so watch out for that. And if you guys want to pause the video and, take a look at these data points, you guys can do that, or look up tradingeconomics.com/calendar and pull this information up for yourselves. Highly, highly recommend that you guys do that. So there is that. Now, on the front with Tesla, Chinese Tesla rival shares dive 11% after it forecasts a plunge in car deliveries. Now, why this is happening, not a lot of clarity. It says, during the first quarter of 2023, I took actions to make changes to our strategy, organizational structure, and senior management team decisively. Quote, I am fully confident in taking our company into a virtuous cycle, driving product sales growth, team morale, customer satisfaction, and brand reputation over the next few quarters. It says, as the upcoming G6 launch and other new products launches fuel rapid sales growth, we expect our cash flow from operations to improve significantly. So a little bit better on that front, but overall not forecasting quite what Wall Street was hoping to hear. XPeng forecast deliveries of its vehicles to be between 21,000 and 22,000 in the second quarter, representing a year-over-year decrease of 36.1% to 39%. So not good. And anything, that affects, Chinese EV, not going to be good for Tesla, because Tesla really does need China at this point. That is a big driver of growth for Tesla. So that is the bit of bad news that you were getting here on the day with Tesla. Overall, I still think the rally is very strong. I do think you're heading up to obviously major resistance, like we've seen at 192. You got rejected at this trend line, and then that 200-day moving average at $201.22 per share are going to be the next big hurdles to really break out above. But I think there's some very positive fundamental things going on. As you guys know, I'm very positive on advertising, and I think any elaboration on that from Elon will be good for Tesla stock. As you've seen at the shareholder meeting, investors loved the fact that Tesla was going to advertise, and I think that is a trend that's going to stick, because just look at what Tesla's done without advertising. Look what Tesla's going to do with advertising. They're going to increase sales so much there's going to be a production concern. Can Tesla produce enough vehicles to deliver them, even though you're in this kind of auto correction, auto crisis, whatever you want to call it, EV makers, and just auto companies in general not doing so well after the price increase that you did see over the last couple of years. People are kind of, the last thing they're going out and doing is buying a new vehicle at this stage or at this point in time, guys. So there you have it. A quick look at the option activity here on the day as well with Tesla. Go ahead and pull this up briefly for you. See what we can do. So you are seeing 273 orders totaling $3.63 billion, positive order value of 58%. For this Friday, you are looking at the volume of 56.43% calls, 43.57% put. So overwhelmingly bullish on Tesla, not really signifying this, uptrend is going to kind of fade away. And I do think it's going to be a little bit choppy. Obviously, if NVIDIA posts bad earnings, that's not going to be a great thing, and it's going to hold up the whole entire markets. And that's really the next big catalyst that I am personally watching out for, guys. So that is going to do it here in this video. Hit that like button and subscribe to the channel. Source your comments, questions, or concerns down below in the comment section. You guys have a great rest of your day, and I will see you in the next one.